Hello, good afternoon and welcome to Trading the US Open live here at the Live Trade Room. Now today is Tuesday the 23rd of October, and to just give you a very brief introduction, we're professional traders here at the Live Trade Room, and what we look to do is to trade the markets with live capital every day so you can really experience the full I suppose environment where we look to identify high probability trading opportunities, where we look to execute trades in this market with a high degree of consistency in our approach. So you'll see us taking the same type of trades time and time again. And that mixed with our ability to be disciplined with our ability to manage these trades is what lends itself to our ability to generate consistent returns over the medium and longer term. So we have an approach which is very technical in its nature. Yes, we do want to have an understanding of the fundamentals, but technically we're very much technical traders and have a comprehensive understanding of the way that these markets move. We would like to teach you that the longer you're with us. And finally, we look to cut our losers short and look to let our winners run when we get those opportunities. And that is the key part. So we've experienced some relatively kind of choppy markets over the course of the morning session. Although we've picked the 6 strongly moving markets, we've picked the correct direction. Except trading it has been a little bit more difficult. But we'll have a look at the charts now very shortly. So before we begin, if we could start as we always do with our risk warning. Please do take a brief moment to familiarize yourself with our risk warning currently up on screen now. Okay, so before we look to trade these markets, what we need to do is to have an understanding of potential market moving news. And for this, we use Forex Factory. So I'll bring that up on screen now. And as you can see, because we're looking for high impact news events, and we can look down the high impact event column, and you can see that there's Carney, the governor of the Bank of England, is due to speak at 4:20. Now it is, if you click on the information tab, he's due to speak about artificial intelligence and the world economy. So has the potential to provide a little bit of volatility, but you wouldn't expect so to any great extent. Now that's at 4:20. Now we don't really have any additional information to really consider at this point. So that's of course not including the macro economic events which are currently in play. And straight away, what we want to draw your attention to is the fact that we were looking to buy the pound dollar today from our analysis this morning. You can see the slow grinding move lower before we've now recently got the explosive move higher. We were looking to sell the euro pound and we were looking to buy the pound yen. So we've seen moves across all of those markets. In addition to that, we've also got our analysis on the S&P 500 spot on, where we were looking for this market to squeeze down to the 2709, and it's literally bounced off that in the last sort of half an hour or so. We were in a really good profitable trade today, down to the 48.49 level. You can see we've ended up gapping lower and extending this move. Now we're down at 68.01. So that in itself was a very good move for us to the downside. So unfortunately, we took a very small losing trade on the pound yen and also the euro pound, but we've had and also we took a profitable trade in the S&P 500 this morning and a profitable trade in the oil market. So we've effectively sort of broken even over the course of the trading day so far, and we've recently as well just seen the explosive move to the upside in the gold market as well. So we've, just to sort of summarize, we've been pretty effective at the directional move. The price action that has led to these moves has been a little bit more choppier than we would have anticipated, and certainly that we would have liked. But we can see that these markets are pulling back very closely to these significant levels. So let's see if we do get these markets continuing to move in the direction in which we're looking to trade them. So I'm going to fly through these markets one at a time. So we'll start by looking at the daily time frame across these markets and just see the origin of the move that we were looking to get involved in, which was a rejection of these lows and some significant bullish price action starting to kick in on the pound dollar. The same analysis really, but when we've looked at the strength and weakness indicator between the euro and the pound, we've seen that the pound has been strengthening quite considerably. So we've had a day of pound strength off the back of yesterday's weakness. So that's quite significant, and we've seen it across the board. Now the level for us, which we were looking to buy this market, was the 145.81. Now unfortunately, we had a flush down to the 145.64. So we've had a 15 pip kind of breakout to the downside, but as you can see, it was short-lived, and we've actually got the move that we were anticipating up to the 146.37. So I suppose that's more synonymous with a market like the pound yen, which can be quite choppy. And now we're getting this pullback to this level. Will this give us an opportunity to take it to the upside once more? We're still looking for opportunities to buy this market, and this could present us with a fantastic opportunity very, very shortly. So we want to see if we can capitalize on maybe a bit of a structural failure to the upside in the pound yen. But we're getting these strong explosive moves followed by sort of slowly grinding lower bit of price action. So we're waiting for that next move to kick in. We'd look at the daily time frame and ask ourselves, does this market have the potential to continue to the upside? We think it probably has. We will see if we do get that follow through or not. So we can look at the 5-minute time frame for now. So we come back to the pound yen. We've had quite a strong move already in the pound dollar. The yen is continuing to strengthen against the US dollar. So actually it's probably looking like there's going to be a little bit more pressure put on to the downside in the dollar yen. Not much going on in the dollar Swiss, and same situation for the dollar CAD. So we do have major news out tomorrow impacting the dollar CAD, so do be mindful of that. We're just currently trading between these levels as things currently stand. So dollar CAD, Aussie dollar extending lower, but doing so relatively slowly. We were looking to sell this market below the 70.76, and we've kind of got a further squeeze to the downside, not so much against the New Zealand dollar. So really we've got some mixed signals coming into the US dollar, so it's pretty neutral really at the moment. It's stronger against some currencies, it's weaker against others. So it's very much in middle of the road as things currently stand. We do like the idea of this market continuing lower. We have tried to sell this level on a couple of times, the 88.28, and now we are pushing lower. But as you can see, we've kind of retraced lots of yesterday's move, so that may no longer give us that that impulsive move, and now we're getting this potential move higher at this point. So what we clearly have on screen is a strong pullback roughly to this level in here. Now it's the next move, it's the attempt for this market to move lower, followed by a strong reversal to the upside, which is what could give us, even though this is looking quite interesting for us at this level, give us a strong sort of 20 odd pip move to the upside to try and compete with these levels. So we've had a strong pullback to this level, the 146.13. Let's see if this pulls back even further now, because if not, and we get a structural failure above this level, the 146.19, we'd be looking to take this market to the upside. So the pound yen is notorious for fast moving, volatile, choppy conditions. So you've got to trade this market with that in mind. Now let's see if we get an impulsive move above the what would be the 146.20 level. Currently it's looking like it's rolling over to the downside, so we can certainly continue to keep a strong look at this market here. Let's zoom in a little bit more. So let's see if the 146.13 holds. If so, we could get a structural failure breaking above the 146.20 and have a really small, concise stop loss if we get that opportunity. So we do want a bit of support coming in at this level, the 146.13, and see if we just get that little structural failure back to the upside now. Above 146.20 gives us that good opportunity to perhaps get in with a really small, probably a 10 pip stop loss on that trade. So one market to really focus on when it comes to the yen is what the US equities are doing. So if this breaks lower, then a buy trade would just be off the table over the shorter term if this market does squeeze below the 146.13. So we failed to break below it. Now let's see if we do get this little move to the upside. You can see that the choppy range bound nature of this market, just up and down the whole time. We really want to focus on now at this stage either buying above this range here, the 129.00, or very much selling below the 128.60 level. So we've got this range bound price action. We don't really want to get into it within that 40 pip range. We'd rather see this market break either higher or lower. We've had a nice climb down from the highs. So still the structural level of the 128.32 is still the major level in this market. So let's see if we just get a little buy trade off in this market. So we've just gapped up just a little bit. Let's get into this trade then. See if we get a nice strong explosive move. So we're getting in on the pullback, and let's see if we get 13.09. So we've got a 15 pip stop loss again in the pound yen. So let's see if we get that next explosive move to the upside. So let's see if we can start attacking the 146.40 level. And it would be in keeping with the pound strength story that we're currently experiencing as things stand. US oil, we like this market to the downside. So look, we've just completed the pound yen. We prefer an opportunity to buy the pound yen rather than to get into the euro yen, just because there's been the strength that we've seen in the pound over the course of the session. So this is very much a trade that we were looking to get into this morning. We had the breakout above, we had a pullback to the 12.33. We missed the entry at that point. The market started to continue higher, and then the market really excelled to the upside during the latter part of the European Open session. And we're currently now experiencing a little bit of a pullback in this market. So if we get a nice strong pullback, ideally to this kind of level in here, which is effectively the level that we were at this point before we got the next movement up. So let's see how this market performs. This again was a nice flush to the downside, a pullback to the 48.50. So you're looking for these kinds of moves. And then we got the next extension to the downside. So currently experiencing a bit of a pullback off these lows. Bit of a structural failure actually to the upside. So let's now see what this market has in store for us. So there's this sort of downward pressure likely to kick in again from these kinds of levels. So let's see if we get this market rolling lower from that level. And that is very much in keeping. If I just put in a horizontal line with his previous lows, it's kind of in and around this kind of area in here. So let's see if we get that next rollover to the downside or not. So we're looking for an opportunity to sell the gold market, sorry, the oil market, should I say. So we'd like to see another structural failure to the upside in this market if we can. I hope I haven't put a jinx on it. And we're getting a pullback currently as things stand in the oil market. Okay, UK oil is, this was the strong level that we were looking at. So we can absolutely look for continuation to the downside in the oil markets. Currently experiencing a pullback. So it might be worth looking at the US oil and the UK oil to continue lower. The US 500 now, we're in this kind of downward sort of trend, a bit of strength coming in, so we'll be interested to see if we can break above 27.19. We wouldn't expect much more movement between now and the US Open in an hour's time, so interesting to see. We're kind of getting a bounce off the 24,900 in already in the Dow Jones. So is that a sign of things to come? We didn't quite get that same bounce off the 2709 level. We've had a concise, and I'd say that the same, this is a pretty concise bounce off the 2490 level. However, it could be a major game changer if we continue to see these prices roll over to the downside. So I'm going to put this level in here, and I'm going to change it to a more significant color because it is a level that we would need to keep a real strong eye on. So we've already had a good winning trade in this market. Let's see how price interacts with that level. We know it's a very important structural failure level. So we're going to just monitor the S&P 500, although there's bear signals across the board with the equities. We would stay away from the FTSE and the Euro stocks for the short term anyway. So so let's just recap. Apologies, I've been flicking from these markets from one side to the other. This could give us another good clean opportunity to get in on this pullback to this level, and I think we're going to take that opportunity as well. So we're going to take a very, very small, concise 68.19 plus the spread 68.23. So a nice, small, concise opportunity to get into this market. Let's see if we can capitalize on the next move to the downside. And we're just going to monitor this low here. So the only reason why we got into this market where we did, and placing our stop loss just taking the spread into account just above this little structural high in here, is because this level is a strong level of resistance. Sorry, I'll just change this back to the normal color. So we're getting a nice strong pullback to that level. So this is the level that we've identified that we'd be looking to sell this market. If I was doing a bit of analysis at this point, and we're seeing this market kind of pull back to that level, we'd be asking ourselves at what level would we be looking for this market to put it back to. We'd have to say just in and around these kind of prices in here. So anywhere in and around that level, you'd often see me draw this kind of, that's where we'd be looking to sell and get that next move down to potentially the 67.91. So we are getting it at this level. Now, if it does break above the 68.19, then it represents a structural failure to the upside. So it would confirm for us that we're probably no longer looking for an opportunity to sell this market. So if we get this move, then we'd kind of want to be out of this trade anyway, because we're likely to be sort of pulling back. However, if we get the rollover from these lows, then we're very likely to push down to these kinds of levels. So it is really a trade-off between risk reward, and it does give us a fantastic positive risk reward just to break down to these lower levels, the 67.91. And let's see if this market can perform for us to the downside. It's got every possibility and is regarded as a high probability trade lower. And the other level I'm just going to take note of is this little bit of price action in here. So hopefully we get a break now below the 68.13 level. Okay, so a few markets to really consider. Want to keep a really close eye on the 27.09 level in the S&P. The oil market, we're just rolling over to the downside, which is exactly what we would like to see. So we're now in a bit of profit in the US oil market again. We've already had a good profitable trade now this morning. We're a little bit off the pace as far as the NASDAQ are concerned. So we will focus primarily on the S&P to see how that starts to perform. And we can see this strong structural rollover to the downside. So that's another one of these volatile kind of moves. So we're getting these strong swings followed by sort of 50% retracements. So let's just see if that is the 50% retracement level. Okay, so roughly, I mean, it's not quite the 50. It's closer to the 61.80 actually, this low. So we're getting a bit of a pullback to this level as we speak. So let me take this off actually, this indicator. Okay, I'm struggling for this market to respond at all now. Hang on a sec. Let me. So I suppose the slightly better level is the 145.93 level, which is again just below it. So again, by taking that kind of small positive risk reward trade to the upside, we've again, it's another practice at looking to get into quite a volatile market, the pound yen. It's notorious for it. This whole platform, I'm afraid, seems to have crashed. So let me get out of this if that's okay, and I'll fire it back up again. The joys of live broadcasting, I'm afraid. Okay, let me reload that platform. I knew something was going on with it. Right, there we go. So let's go back into this trade. So as you can see, there's quite a lot of sort of opportunities sort of unfolding at all times. And it's just getting a coherent kind of view on it all now. You see, we've still got no doubt really that this market is very likely to be breaking above this level at some point. It's just looking for that opportunity. And this was the first opportunity to potentially take that market to the upside, and obviously failed. And now if we start attempting this lower and we start creating a structural failure, that could be the next opportunity to see if we can still get paid on this trade, because we've tried it a couple of times now. And again, it's just waiting for those levels to reveal themselves. And if you learn how to do that on a consistent basis, you'll have far more successful trades than negative ones. It is a useful skill to develop, but it does test your patience and your. So we're getting this sort of slow grinding price action lower again. So we're not quite getting the flush to the downside just yet in the oil market, and so we've lost some of these levels. So this could be quite a decisive level here for the oil market. Is the move to the downside potentially over for the day? Is certainly a potential outcome. Maybe that is the case. So we'll see. There's this sort of structure being created here. So let's see if this is our level of resistance, because we still do expect this market rolling over to the downside. Okay, so let's look to tidy this up then a little bit. Let's retrace our steps and just have more of a comprehensive understanding in terms of what we're looking to do during this session. So it did wipe a couple of little bits of improvements and amendments. So so when we look at the daily time frame on the pound dollar, it's still got the potential to squeeze a little bit higher over the course of the day, but really this is a I suppose a candlestick that you'd be quite comfortable and satisfied with for the day. So we can see prices ending around these kinds of levels. So maybe for that reason, we might still continue to see if a trade exists in the euro pound. The level we would like this market to pull back to is somewhere in and around the 18-19 levels. So we're actually only sort of 5 pips away from that, and if so, that might still constitute an opportunity for this market to push lower. And we are trading a volatile market that is moving around on the volatility. So what we'll do is we'll split the foreign exchange screen into two. It is kind of worth continuing to look at this pound yen, just because it does have more scope to the upside. But we kind of need to, let's look at this on the 5 minute. So we're going to continue to look for pound strength. There's no major reason why we shouldn't continue to do that. We want to bounce back to the 88.19 and ideally to the 145.93 area, somewhere around here. Okay, so we've had the oil market just spike to the upside. So it's not responding to any great extent to these levels of resistance in and around these levels. So are we likely to see a bit of a strong pullback at this level? We shall certainly wait and see. I guess it's fair to say we'd still expect it lower for the session. So we'll keep an eye on the S&P 500. We also want to look closely at the US oil. We very much want to have a continued look at the gold market as well. So the whole flight to safety argument has been kicking in as far as the gold market is concerned. So this is our trade plan for the session. We're very interested to see if we do get a break lower below the 27.09. That's very, very significant for the S&P. The oil market has still potential right now to continue lower. It's obviously just breaking higher. And what we're not prepared to do with this market, I think we had a $10 trade in this. We weren't willing to expose any more capital on that trade. So it was a very tight, almost more of a scalping trade with a really good positive risk reward. And generally we want to get it that way round. We want to get it the right way round if we can. And sometimes you get these little poke outs and then you get the move. But it still stacks up for us to get into that trade with the expectation of it to move lower. And that's still what we might get. We still might get this market pushing lower. But we're not going to work with any of these highs up here, the 68.40 and risk, you know, 40, 50 US dollars on the trade. It doesn't sort of stack up and make sense just this time round. And we've already had a $44 winner in the oil market this morning. Yeah, hi Renko. Watch the lot size, the pound yen. Yeah, you're absolutely right. Absolutely. So because we're trading with more average account size and looking to grow the normal kind of average tradable size for most of our traders, we're trading about $1,200. So as a result, we need to take our trade size into account. Yes, we do use leverage to obviously trade much bigger size than what we have the capital to do. So thanks very much on that. Anytime we but just by default and we use these one-click trading tabs, it's important to make sure that you're trading at your predetermined risk levels. So on average, we take about 15 pips per trade during this session, and at a trade size, if we're trading foreign exchange, of 0.1. So as you can see, and quite rightly so, and thanks for pointing out, Renko, 1.0 is 10 times the intended trade. So it is important to make sure you get that trade size correct. So it's 0.1, 0.1. And with the S&P and things, we can trade one contract. Those of you that are members of ours can go to the live trade room, and we have our risk management calculator, and we have lots of information for you to calculate trade size properly. So we're strong advocates of knowing what your exposure is when you get into the trade. Obviously, when you're trading smaller time frames and you're trading more fast-flowing markets, you're trading 1-minute charts and things like that. You need to have an understanding of your exposure, and getting this trade size is all important. So when we shut down this trading platform and open it back up, we often see the default settings start to kick in again. So it is an occupational hazard. So potentially we could look for an opportunity to buy around this level. If we just zoom down, if we can keep the risk fairly small. I wouldn't be looking to chase this market endlessly now, so we're getting quite close to that level here as well. So maybe these are the levels that we'll start seeing some increased pound strength creeping in. The daily time frame, this market could easily squeeze lower back down to these lows, but they're so volatile, it is difficult. So again, we've experienced sort of a five-minute explosive move higher, followed by long, sort of protracted grinding lower again. Yeah, thanks for that, Renko. Great heads up on that one. Okay, a bit of strength is beginning to creep in to the pound yen off a level of support. You can see the importance of this level here. It's quite clean as well, this little pullback. I suppose we've had the directional bias correct on all of our trades today, ultimately. I suppose just the execution of some of them are still based on principles of support and resistance, so not an awful lot wrong with the decision making. But obviously we've actually saved some of our capital because of the kind of tighter approach to risk management. And I wonder if now we're getting this break below the 145.93 level, which would be significant to the downside. Still looking at the oil market. Maybe it's just taking a bit of a breather. It's relatively flat. So it looks like the pound yen is going to continue lower. I mean, if we don't get an opportunity in and around this little section here, then the next leg is all the way back here at the weekly low, which is the 145.81, which we're now breaking down towards that level. So we're no longer interested in buying this at this price. So if we get an opportunity at this lower level, then we might look to get into it, but maybe this is just a really strong explosive move higher followed by not an awful lot else. Slow grinding price action lower. So still looking at the US oil. So some of these trades are just looking less and less attractive now as the price action unfolds. And that's not necessarily a bad thing. I suppose knowing when to trade and when not to trade are important factors that we need to take into account when we trade. So the oil market looks like it's just breaking above this level, and we do have the weekly low just above it, the 68.40. So if we did get a little bit of a pushback to that level, and that certainly would be an interesting place to look for opportunities to sell from. So we just need the markets to conform to kind of our view really, and see if it corresponds. And if it does, we can get into the trade, and if it doesn't, we might just have to exercise a bit of caution and perhaps just back off it a little bit. So the oil market pushing higher, the S&P just sort of flirting just above the 79.09, 27.09, excuse me. Gold market flirting but pushing higher, but really slow grinding price action now. So let's see how this market performs. We have the potential for the pound yen to continue lower and the euro pound to continue higher. So hopefully we'll get a little bit of a pullback to the 88.19. We'd need a structural failure to the upside potentially for the pound yen. And it's potentially not all over for any of these trades for the remainder of the day. So we've had kind of an interesting day really, where we've been pretty effective at trade selection and direction. The market conditions have been a little bit more difficult, so it's not been as easy to capitalize on those trades as what it on other occasions could be. So bit of a kind of a neutral day across the board really, with potentially a couple of other trades for the remainder of the session in the pipeline. Looking closely at the US oil market, and potentially still a bit more pound strength. But we're going to switch across to the live trade room again now, guys. So just to flick and just to leave you really with a summary. Not much happening in the euro dollar. Pound has been strengthening today against the dollar, so we've been looking for pound strength today. The yen has been strengthening against the dollar. Not much movement against the Swiss or the CAD really for now. It's mildly strong against the Canadian dollar. We do have the Bank of Canada tomorrow to bear in mind. The Aussie dollar just very, very slowly grinding lower. That's all that's happening, and nothing really happening for the New Zealand dollar. So we've got a situation where we've got sort of a neutral US dollar market. Euro pound is just pulling back, so we do like the idea of potentially looking to sell if it could just squeeze a little bit higher. The pound yen potentially creating a bit of a structural failure now at this price point here. So if we do get a break above the 145.98, it would certainly give us a pretty tight stop loss again, and it'll give us a structural failure to the upside. So we'll have a look at this when we switch across. It's looking like it's going to continue rolling over. So the only other level is the 145.81. So if we're able to get a pullback to that level, that would work just as well. Really choppy price action, although we're just now extending lower, so the strength seems to be really creeping back in to the yen, should I say? Apologies. So we're seeing range, very much range bound, very choppy trading conditions, and now it looks like we're just about to squeeze lower in this market. So we can have a look at that across when we move across now to the live trade room. Moving on to the gold, we've always liked this market higher, but as you can see, we get an explosive move in a relatively short period of time, followed by just some selling beginning to creep in to the markets. So difficult price action, and it looks like we're extending higher, and now we're getting that kind of constructive reversal to the downside. So there might still be an opportunity to sell US oil as things currently stand. The UK oil market is still looking significant to the downside, currently experiencing a pullback. We have moved quite significantly already today. How much more we're going to get out of this, not too sure. Wouldn't be surprised if we don't really get an awful lot more out of the US oil. So it's a funny one. It's kind of you can often get really strong moves in relatively short periods of time, and then not much movement for the remainder of the trading day. So maybe it's worth just waiting to see if we get some continuation tomorrow or not. The US 500. So we've got a major structural low just sitting in here. You can see the 2709 structural failure to the downside. Tomorrow we could be presented with some really interesting opportunities in the US equities. So hopefully you can join us for tomorrow's trading. And we just step back really for now from the Euro stocks and the FTSE 100. Definitely higher probability trading opportunities if we did get a break below the 2709. So it'd be interesting to see now in 30 minutes time the US Open, see if we get explosive moves lower. If so, we're likely to get a really strong move further to the downside. So on that note, guys, we're quite happy to just monitor these trades as things unfold, see if we get those opportunities or not. So we'll keep a close eye on these. Let's see if this market is extending lower just yet. Yes, it is. So again, the correct trade idea, and this is the explosive move that we're now experiencing. We're now down at 67.93, and we had a stop loss just above the 68.23. So we're going to switch across now to the live trade room and just see if we can get into that market again. And the gold market is just rolling over to the downside. So maybe step back from the gold market for the time being, and we're getting this stronger move now to the downside. So we've only just very marginally got grazed out of this trade. So it's just the importance of support and resistance. Unfortunately, we've had a bit of a structural failure, which actually to the upside, which just subsequently has failed now back to the downside. So it actually was a bit of positive for a period, and then that level has just rolled over to the downside. So it's just important to be consistent with what you're doing. So we'll come back to that now very shortly as we switch across to the live trade room. So if you would like to join us, you're very welcome to gain instant access. Just read the description below, and you'll we're currently offering a 2-week free trial if you would like to join our products and services completely free of charge. We have over 76 live trade rooms available for you per week, excuse me, per month. Let me get that correct. So 76 live trade rooms per calendar month. You'll be very welcome to join us for it. And after the 2-week period, if you're still engaged in some of our and you'd like to become one of our members, then it's $9.99 per calendar month. So hopefully you find that incredible value, and all that does is contribute towards your access to all of our live trade rooms. So please do feel free to connect with us through our YouTube channel. Just search for the Live Trade Room and give us thumbs up if you can, and click the bell function. You'll be notified when we go live. So and also through Facebook, Instagram, Twitter and LinkedIn. The details are there up on screen. So all that's left for me to do now is thank you as always for joining us. Do take care. We do need to switch across to the Live Trade Room now. So from everyone here at the Live Trade Room, take care, and we'll speak to you soon. Bye for now.